Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market, the Magnificent Seven stocks, as well as other leading stock indicators. Let's start off with fear and greed and CNN. We are still up in greed, and with pie vesting, still the same. So we had a little bit of a downturn towards a neutral area about a week or so ago and have popped back up into greed. Going over to crypto, because I know that's what most of you viewers are here for. And again, I'm going to keep saying this, what the stock market's doing is going to affect the crypto market. So sometimes if the stock market is encountering some trouble or turbulence, then usually you can see that have an effect in the crypto market soon after. But as far as Bitcoin crypto, we are up into extreme greed. So do be cautious out there. If you are new to investing, especially looking at making money in crypto, now is probably not the best time. Could you make money? Sure, but it's very risky when you're buying the tops and buying extreme greed. So do be very careful. Let's get into the S&P 500. So you can see that it is still making its way up very well. Had this little bit of a correction. I was looking for it to go down to more of this 20 week moving average. I was looking for something like a 3 to 5% correction. That didn't really happen. So it came down to this trend line. And by the way, this you can see this big blue area, this channel. This channel's just been active since the great financial crisis. So really never getting above or below it, only by a touch with the candle body and the wicks in 2020, of course. But just from this downturn that we had going into 2022, we have these tops that I drew these parallel trend lines with as well. Got a good bounce off of it. So that is looking pretty nice right now. That's moving on up. So that being said, if the stock market continues to stay bullish, you'd be watching for this next area that's around the 6,400 area, and then up here closer to 7,000 should that bullishness continue. Whenever prices get really overextended, there's a couple indicators to look for if you're wanting to see some proof for a possible pullback, and that is one of those is the relative strength index. The other is the MACD. And you can see the MACD right now. All right, right here on the green, you can see maybe it's getting a little peakish. It does have some room to go compared to some runs in the past. So once you can tell it's getting a little bit peakish, then maybe it can start to have a pullback because that move's getting extended. And as far as the RSI, let's see where this peaks out, because so far we have higher prices and lower peaks in the RSI. That's known as bearish divergence. So for me, I don't invest purely based off bearish divergence. I just take that with a grain of salt because it can take a while to play out. But as far as the rest of the video is concerned, we'll just have in our buy-sell signal indicator. Let's go over to the VIX. And the VIX, man, we were getting somewhat volatile. I was looking for more volatility going into the election because that's what a lot of charts were indicating. But really, it never broke out like it did with the yen carry trade unwind when there's that 10% section in stocks, and crypto. Bitcoin had that like 30% correction, something crazy like that. But low volatility right now. So let's see what it does down here as it forms somewhat of a base. And a couple other indicators for us to look for. Well, this is the price earnings ratio of the S&P. I'm really not going to sound the alarm until it starts getting into this dark pink area. But yes, historically, we are overextended. So do know that is a risky make. If you're looking at any long-term investments, it is very possible that in 5 years, some of those aren't positive. So that's why I'm looking for discounts on stocks that I know will be around in at least 10 years. The Fed, they just cut rates again by 25 basis points. And I talked about how even though they started with 50, they didn't cut in October. So really, during September, October, that was an average of 25. And so 3 months in, we have 75 basis points worth of cuts. That's 25 per month. And so I've been reading this somewhat like a 1998 style scenario, also somewhat like a 1970s decade scenario, because we do have that inflation elephant in the room. We'll see if these cuts will reignite inflation down the line, and if so, that could change things. So right now, if the Fed is cutting low and slow, typically that means there's good bullishness for the next year or two in the stock market. But after that, things can unwind. And if they start to cut heavy and fast, or you see inflation spiking, that can tell you where the bottoms in the markets are. And we've just really been following this dark green line since the rate cuts. So we are in a non-recessionary path as of right now, post rate cuts. This is another thing to be considerate of. I have been showing you guys another graph where it shows that there's somewhat of a downturn going into the election, and then Q4 is very positive. I've also been telling you guys that typically from November to April, October to March is the most bullish time of the year. Now, this adds something a little different to that, and that's with the presidential elections. Yes, Q4 is positive, but once the inauguration comes, usually it's sideways and down. So for any of you crypto people like myself who are considering the rainbow chart cycle, the 4-year cycle, if you will, this would play right into that, because you can see it's about half a year down, and then second half of the year really goes up right around that 200-day mark, or even 180. But this is just an average. Things can always break from it a little bit, but keep this in the back of your mind that next year, if quarter one isn't bullish like many, so there are the charts saying that Q1 is typically bullish, but if it isn't bullish, then you can be taking a look at the seasonality for possible opportunities to get some better value. As far as the percent of stocks above the 200-day average, it's still a little bit elevated. We see it come down to these moving average supports, the 50, the 100, the 200 right now in the weekly, but it could get higher. And anytime it seems to get close to 70, we get those pullbacks. So just something to keep an eye on. Of course, the yield curve inversion / uninversion. What this basically means is after the yield curve uninverts, on average, the bottoms of the market tends to be about a year and a half, 2 years after. And so, but this can take a while. So as we've seen uninversions before, this is where the following bottom was for 2020. Uninversion.com bubble, this is where the bottom was with that vertical red line there. So the thing I would say could be different this time around is this inversion area. To simplify this for any new watchers, when the Fed raises rate, the bond yields, they invert in their pairing. So we're pairing the 10-year to the 2-year, and we've been inverted for some time. So the way I've been mulling this over is that maybe the bottom, because we were inverted so long, maybe the bottom's going to be even further out. Longer inversion, the bottom's further away. So maybe it's 3 years away as opposed to the last couple times. Unemployment rate right here, still flat, no new news there. Bitcoin having a little bit of a correction here. So Bitcoin, let's go over to log scale. Let's go on the daily. Still very extended. And you guys can see we are so far from our moving averages on the daily. I don't really zoom in further than that. I'm not a trader, maybe a trade investor at best with some altcoins. But really the next area of supports I'm looking for, this trend line right here. Bitcoin's been in love with this since the bottom. And you can see it's been bouncing off of it, riding up on it. Since the very bottom, Bitcoin's loved that trend line. So if it comes back down somewhere around this 82, mid-80s level, depending on how much time it takes, hopefully look for support there. But you got the 10-day moving average, the 20-day moving averages, of course, EMA, SMA. So just a correction is normal. And I still am believing that by the end of the year, I'm looking for this 90 to 102K to come to fruition. So 90 to 100K by end of year, 100K specifically. All right, let's get into the Mag 7 stocks. And as you can see, NVIDIA breaking out even further. So here's where it had the stock split. Had a bit of a correction. It's come back up. NVIDIA looking very bullish. This is just on the daily. You can see not getting under the 100-day moving average and having a nice bounce off the 20. So let's, I'm sure a lot of these are going to look pretty extended. So maybe I am going to keep on the RSI. just to look for some possible reversals in strength. So yeah, you could say there is some bearish divergence there on the daily, for sure on the weekly. My God, you can see how crazy that is. We'd be operating from here. So let's see where this move extends out to. But this is on the weekly right here. But guys, I try to answer. Here's a couple questions I try to answer for myself when I'm investing into a stock. Is it something I like? Okay, yes or no. Is it something I use? Yes or no. Because if it's something you use, you have actual wisdom of insider information if the product is good or not, if they are getting better or not. Okay. When you take a look at the charts, is it within the range of its yearly high or yearly low? If it's within the range of its yearly low, good discounts. That's why we have on the moving averages. But right now it's just at a all-time high. And so I don't buy it at an all-time high. If I like something, you have to be willing to be patient, wait for fear to come back in. As you guys know, we are in greed. So just factor those things out. You can also look at the forward PE ratio. I've sometimes look at the Market Watch and take a look at the assets to liability ratio. Make sure that's always positive. So if the liabilities are more than the asset amount of dollars, then you're taking on a big risk. So I'm not buying this. Doesn't mean I don't like or love the stock. But think of it this way. We're at 3.62 trillion. So if you were to invest 10K into NVIDIA right now, you would want this market cap to be 7.2 trillion. I don't see that happening anytime soon. I've been saying that at the peak of this bull run we are in, I could see these getting into the 4 to 5 trillion range, but that's it. So I'm not looking to double my money from any of these. I do think it's a risk. Okay. Another question I ask for myself is this stock going to be around in 20 years? If you can confidently say yes, then that's another good reason to buy. Okay. Let's that on that buy sell signal again. Why not? So Microsoft, one that's staying at somewhat of a good deal, so it's been ranging sideways since it's been hitting this 50-week moving average. We've been saying that, hey, this isn't the worst time to dollar cost average in, even if we do see a recession 3 years from now, even if the stock market plunges by 50%. This would be the beginning of where I'd look for dollar cost averaging on something like Microsoft if it was a stock I really love. But am I buying right here? Me personally, no. Of course, nothing I say is financial advice, but just some things to keep in mind. It is having a nice bounce off this 382 fib. And yeah, I think, hopefully it's able to keep holding this 50 and then move further up. As far as Apple, let's see here. Apple 3.42 trillion. Okay, something interesting happening here. So you can see we drew this fib from the high to the low, and Apple finally got up to the 1618, got above it. Now what do you see happening? It's coming down and using that 1618 fib as support at around 220. Did have a weekly sell signal. So you want to see it hold these 20-week moving averages as well as 1618 and blast further up. And where the 2618 is, can you imagine Apple at 280? That would be the next major target in my opinion. But it's got to hold here, and if not, then you'd be taking a look at these targets, 190. All right, let's go over to Amazon. Amazon, it looks like it's finally breaking above its all-time high line. That we had that fake out, but now it's getting there. So Amazon, the 1618 is here. Let's first make sure our fib is off log scale. Yep. The 1618 is up here at 255. So 255 for Amazon for the next target. Otherwise, it'll just keep coming back down to this 190 area. Google, you can see it a nice bounce off the 50. We've been talking about how Google loves that 50-week moving average, and it wouldn't be the worst area to dollar cost average in. Come back up, maybe it's going to get up to that 1618 again and around 193. And if it can get above that, then you'd want to see it hold it as a base. Meta, it was above the 600 mark in this 1618 area. Talked about this one, how it's loved this 20-week moving average. And anytime you're looking at technicals, take a look at if you're looking at moving averages or fibs, ask yourself, which one does the asset really like or honor? And Meta has really honored this 20-week moving average, and it's had good bounces off it. So hopefully we see Meta start moving further up. And the 2618 would be at around, can you imagine, in the 860s for Meta? That's if stuff gets stupid bullish. And lastly, let's take a look at Tesla. A lot of people have been talking about this one over the weekend. So we had this big move on this, you see this descending trend line. Tesla got above it, came down, had this trend line, okay, had all these moving averages right here, the 50 and the 100, had a buy signal, and boom, took off. And as you can see, this channel that it's been in, it wicked above it. So let's make sure, I'm willing to be patient and make sure that this isn't a fake out getting above here. Maybe it breaks above the channel. Tesla can be, it can be weird. It can act like a crypto, if you will. Am I buying Tesla right here? No. And I'll even admit I have bias against Tesla. Nothing against Elon Musk. It's just 90% of their profits are from automotive, and its market cap is 20 times higher than other automotive companies. So me personally, I ain't buying it here. Now, if you did like Tesla, you had opportunities here and here at the 100-month moving averages, or anytime at the 200-week moving average. So you can be patient on a stock like this. I wouldn't go chasing Tesla. This one's typically so volatile that it will come back. And again, if you like something, if you're an Elon bro and you like it so much you're going to buy here, then you need to love it enough to buy it down here. So that's my philosophy. Any stocks I like enough to put my hard-earned money into, if it goes lower, I'm going to dollar cost average in more. And if you're not going to buy in more when it's at more of a discount, you shouldn't be buying it, in my opinion. So anyways, guys, let me know what you think in the comments below. And yeah, I hope this week has brought many of you a lot of good profits like it has for myself. So thank you for watching. Tomorrow I'll see if I can do a live stream. No promises, but anyways, hope y'all are doing well. Have a fantastic Thursday. Take care.